Hey, and welcome back to a new episode of Common Sense with Adam. Today we'll be looking at my Robinhood, my personal Robinhood portfolio after 1 year. And essentially we'll just look at the ups and downs and the overall performance. So really, today we're talking about actual cents and dollars. So I'm excited about that. And by no means should you expect your results to be like mine, but I more or less would expect your experience to be similar to mine. Because I am no expert by any stretch of imagination. So this, I think, is right in line with what an average Joe investor, if you would, might expect with dumping some money into Robinhood or similar platforms. So I would say this video is ideal for someone just dabbling like myself, or maybe a beginner that's just starting to scratch the surface, or for those who are just curious, who are far or remotely removed from the game, but are just curious what essentially the outcome might be of someone playing this, let's call it, wild game. But before we get any further, let me just say this. I'm not doing the video to scare anyone off, or get them excited, if you will, about the stock market. People have been investing in stocks, bonds, crypto as of late, but for many years. So this isn't new by any means. It is what it is. The game is rigged, as some would say. So I'm today just sort of showing you my personal performance, just so you more or less can set some expectations for yourself, because I think it's a pretty realistic view of the ups and downs, which you'll see later. And actually, one more thing before we begin is, while we'll be looking at stocks today and my stock portfolio, I prefer, or I'm a huge believer of index funds, or investing in index funds. And that is where my serious money, if you will, is placed. My 401k, my Roth. So by no means do I own any individual stocks in those portfolios. It's all about indexing. And for those who are new to the index funds terms, I think the simplest way to describe them is simply bundles of hundreds, and gosh, if not thousands, of different companies within one sort of vehicle. So when 1 or 5 or 20 stocks within that vehicle or index fund drops or rises, for that matter, it doesn't really move the needle all that much for the entire fund. So the performance isn't as sporadic. It has a more, especially if you kind of pull out and look back, I would say that you'll sort of see that gradual trajectory of 7 to 10%, and that's more or less the expectation with the index funds. But that's another video for another day, because today we're just looking at my Robinhood account, which I opened literally just 12 months ago. And over the course of 6 months, I put in $320,000. So today we'll be looking at the performance of these 320K, and essentially you'll be making your own judgment call. And of course, I'll be narrating what I think of it so far. And in my mentality with investing within the platform, or buying the individual stocks, is similar to, or I should say, index fund oriented, because these 320,000 are essentially spread over 80 plus, closer to 90 different stocks. It makes sense for me to do it this way, just so I don't have all the eggs in 1 or 2 or 10 baskets, but I'm spreading it over up to 90 and more. Really, that's the plan. Because otherwise, I think it's way too risky to play the game at all. But before we get any further, so I want to address the beginners or the newbies to the game. And when you hear stocks, that might just fly over your head. And at the end of the day, all it is essentially shares for different companies. So each corporation, so a corporation is made up of ownership shares. And when you're investing in these companies, in these stocks, or buying these shares within these companies, you're essentially buying pieces of those companies. So that's really how I think about it. That's how I would encourage you to think about it. So buy shares within companies that you believe in, that you know of, that are, I don't know, let's call it reputable companies that you can comfortably hang your hat on. Companies that have either A, been around for a long time, or B, companies that I see really being the future. Anyhow, without further ado, let's crank open my Robinhood account. And I'll say this, it is a free account, and nor do I recommend the paid version of it, which essentially simply allows you to buy on margin, which is more or less a credit card that Robinhood could give you to buy stocks with money that you don't have, which again is a horrible, terrible idea. Okay, here is the 1 year view of the account. I started at 320 back in early February. As you can see, very little movement there. So it was a very sort of gradual buying. And as of today, I'm $56,000 in the hole, or in the red. And in fact, when I was sort of preparing for this just yesterday, I was $62,000 in the hole. So today's performance is actually today's. So far, the market's been open for 3 hours. So I am up 56, actually 6,000 as of like right this second. So as you can see, the market really fluctuates and things are a little bit wild, a little rocky, especially right now. So if we look back at my 3-month view, so this is for back in November, my $320,000 essentially went to 417. So we're talking 420. So it went up to essentially a good $100,000 just to drop $120,000 in the last 90 days. And that's sort of the wild thing of it all. So for anybody who's looking to play the game, it's like you gotta have the stomach for it. Because at the end of the day, I mean, I don't fret. Give it a year, give it 5 years, and I'm in it for the long haul. There's no way that all these companies will be just sort of this much in the hole. So when they succeed, I succeed, and generally the market is on the incline. So again, I'm not worried, but if you're someone that might be, someone that would look at their performance and let's say $120,000 loss in 90 days, if that scares the heck out of you and you see yourself as someone who would pull the plunge and sell, then I forbid you to even create this sort of account, play with any stocks for that matter. Stick to 401k, stick to IRAs, Roth IRAs in particular, and pick an index fund. Vanguard's what I would recommend. But again, that's another video. And here is the 1 month performance now from 3 to 1. So in 1 month alone, it was a $69,000 decline. Yesterday it was at 75. So again, a bump today, which is great. But at the end of the day, you don't really know what this thing will do. So just be prepared to buckle up and weather the storm. So let me say this, out of all the stocks that I've bought so far, I haven't sold any. And while I do want to offload probably, 10 that I just know they were just a bad or knee-jerk reaction purchase, I don't want to do that until the entire stock market is doing a little bit better to where I ultimately am just looking to break even on those few stocks. So the moral of the story is that if you're gonna play the game, you gotta be able to stomach some of these downs. Ups are exciting, don't get me wrong, but when the downs are here, and they will come, you just gotta be able to hold the fort down and gosh, don't even look at it. Unless you're looking to invest more to bring the average prices of the stocks that you already own down. Because in my opinion, I don't think we've hit the bottom yet. I think things will be worse before they'll be better. So at the end of the day, I do expect to buy in slowly into the market for the next 90, 120 days. Maybe sooner, it just sort of depends. Today already seems like a rebound day, but tomorrow it likely won't be. So I'll sort of play the calculated game as much as I can. But the other takeaway is not to try to time the market. That is what any sort of financial guru or financial book will tell you. Timing the market is a game that you're sure to fail. And all that means is essentially buying when it's low, selling when it's high, and thinking you've got the crystal ball to be able to win. Anyone or most anyone who competes or tries to outperform the market does not. So the average professional investor actually does not outperform the stock market indexes, which is a wild thing. But it is true, it is the reality. And that's it, ladies and gents. That is really what I wanted to show you today. I hope you find it helpful. And while I don't expect for your results to be the same, again, I do expect your experience to be more or less similar, to where there'll be ups, there'll be downs. You just gotta prepare and sort of be hard-headed as things sort of get shaky, because you've invested in companies that you believe that will, in the long haul, win. No need to fret. Just sit back and do nothing is really the moral of the story. Thanks for watching. I hope you found this helpful. Wherever you are in your journey, I think there's something to take away here. Please do leave your comments below. Hit like if you haven't, subscribe if you haven't, share with someone if you haven't. I mean, at the end of the day, as you could see, this content is absolutely free and not sponsored by anybody for that matter. So, up to date, the channel's made like $30. So in the grand scheme of things, it's nothing, especially as it relates to the time invested here. So by you just doing a simple thing of hitting like, of subscribing, and even sharing with somebody, it would really go a long way for me. So for that, I'm thanking you in advance. Thanks for coming back, and I'll see you again next time.